JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 18th of March, 2021. So yep, welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So, now then, jumping into the charts, the first one I want to pick up here is the German Index Dax, and as you can see, the index is performing quite well today. It did have a nice, beautiful gap here to the upside. It managed to reach the area today near the 14,780 zone, where it found resistance and it drifted back down again. So long story short, for now guys, what we're gonna do here is we're gonna keep an eye on this barrier, this 14,780. If it continues to provide resistance, and maybe we could see a bit of a corrective move here to the downside, maybe even we could fill up this gap. However, of course we're not gonna rush into anything yet, because again the upside scenario is still valid, and especially if we clear that 14,780 zone, then yes, higher levels could be met. So with here right now, we are at a very interesting spot, a tricky spot of course, but again, let's see how this is going to play out. Now, Dow Jones Industrial Average also managed to rally yesterday, and it reached the area around the 33,047 mark, so approximately around there. On the cash index, it might be a little bit higher, but nevertheless, we're taking it as we have it here during the main trading hours. And yeah, I mean, we can see that the now the index is already popping above this area, and as we speak, it's creating these not these, but a new all-time high. So yeah, let's see how far this can travel. I mean, so far it's everything's looking quite positive here for the Dow Jones Industrial Average here, especially if it continues to trade, for example, above this, above yesterday's high near the 33,047 mark. If it stays above it, then yep, it has a good chance of moving further north. But if it doesn't, well, I mean, we could see a bit of a corrective move here lower. However, we'll get a little bit more comfortable with that idea if we get a drop below the 32,793 territory right here. So keep your eyes on that one. Jumping into DXY very quickly. So DXY is pushing higher again, and as I've mentioned before, guys, always wait for that daily candle to end, and as you can see, that's the reason why. So we had these little kind of false breakouts here and there. Even let's say today we were kind of trading below this hurdle, below the 91.36 territory. We were slightly below the 21-day EMA, and what I was saying that let's see how this daily candle is going to end, because if it ends there, if below this area, then yes, we could see lower levels. But for the upside, if we get a nice push and we see the daily candle staying above the 91.96 territory, that's where we could get a little bit more excited with the upside. So keep your eyes on that one. Gold very quickly. So beautiful move to the downside, and if you remember this morning I said that in order to go for some higher levels, well, wait for that push above that 1760 territory. And although we were above this downside line, as I said this morning as well, that we need to see that daily candle remaining above this downside line. But excuse me. But as you can see, the commodity is drifting back down, and everything's kind of working in line with this idea that I've mentioned from Monday this week, that even if we travel higher, if we see a good resistance near this downside line, near the 21-day EMA, as you can see, although we had overshoots above the 21-day EMA, still the daily candle is struggling to stay above it. So that's why this scenario is kind of working out perfectly. So let's keep an eye on this one. Let's see how this is going to play out. But for now, everything's looking quite bearish, I would say, for gold. Jumping into WTI oil, so perfect move to the downside, and yep, we are now testing that 21-day EMA. So recently I've talked about this, and basically this morning I also mentioned that this pattern here could be seen as a potential descending triangle, which according to all the TA rules tends to break to the downside, and this is exactly what happened. So we had a drop below the 63.79 territory, and yep, now basically we are testing that 21-day EMA. So let's see if it can provide some support as it did here in the past, for example back here on the 3rd of March and on the 1st of February. Will it do the same trick? Well, we'll have to just wait and see. For now, this is where it's stalling, but if it ends up staying below this 21-day EMA, then yep, a larger corrective move here to the downside could be possible towards the this upside support line drawn from the low the 29th of October. Initially, that's what we're going to be aiming for. Now Bitcoin Cash, so still struggling with this area here, to be honest, with a couple of areas here, and recently I spoke about this, and I said that the fact that it's trading above this upside line, of course, yes, it gives a bit of hope for the buyers. However, it's still struggling with some of these levels here, with some of these barriers. The 553 level, that's what I mentioned previously. So in order to go for some higher levels, we would like to see at least a nice good push above it. For now, I will say that yes, we are struggling with that barrier, and we're also struggling with the 21-day EMA. However, not really shifting lower. For me, I need to see a break of this upside line and a drop below the current lowest point of this week near the 502.50 zone in order to go for the downside. AUD-JPY, and here the pair is struggling with this highest point of February here near the 84.95 territory. So what it means here is that if we see the pair eventually staying above this hurdle, then yes, it increases the chances for a further move north. However, if we will get something like this right now, where the rate will stay below this 84.95 territory, then we'll just get ourselves a very nice, beautiful shooting star here, which could be seen as a potential reversal signal. That said, I would like to see a break of this upside line first, drawn from the low of the 26th of February, before let's say examining the downside, and ideally also a drop below the 84 territory right here could do the trick for more sellers. NZD CAD, very quickly on this. NZD CAD is stuck here. It's kind of in slight consolidation mode. If you remember, I've mentioned this one recently, and basically the idea was that if this downside line taken from the high of the 25th of February continues to provide resistance, then there is a good chance for this pair to drift lower. And well, I mean, so far so good, I would say. The downside line is providing resistance, but now the obstacle here on the way lower is the 200-day EMA, together with this 0.8942 mark, and that's the highest point of September of 2020. So in order to go for the downside, or to get a little bit more excited with the downside, yep, a nice good drop below this area would be needed, and this way, yep, we could start aiming for that 0.8868 level or even below that. USD-JPY, so here the pair is similarly like with AUD-JPY. USD-JPY is struggling with that barrier, this 109.23 territory. I spoke about this pair yesterday, and basically what I mentioned here was that if we get that daily candle staying above this area, then yes, we'll go for some higher levels, but so far we're not really getting that, and instead we keep getting these little false breakouts. So that's not really working well here for the buyers, because as I said, this is just being this is just a slight tease, and yep, we need that kind of daily candle remaining above this area in order to go for some higher levels where we could target the 109.85 level then. For the downside, a drop below the 108.34 territory would be required. GBP USD, so reversing away from its psychological 140 territory, initially kind of testing it, but now you can see that this is the pair is now drifting back down, and yep, however, well, I mean, there is a chance for this one to drift lower, of course, but I'm going to be a little bit on the careful side because we're currently still trading above the 21-day EMA, and if that provides decent support, then yes, we could go for another maybe potential reversal here back to the upside. Either way, still for me to get comfortable with higher levels, I need to see a push above this 1.40 territory first before aiming for higher areas. And for the downside here, guys, I mean, if we eventually drop below this 1.3888 territory, now this is where maybe more sellers could join in. So and then we're not gonna drag this one way too much to the downside, only up until here, up until the 1.3780 territory, somewhere around here, because what I want to see here is, or should I say, I want to see if this is going to happen or not. Basically, will we get a little range here, roughly between the 1.3780 and the 1.40 levels? But again, that's too early for me to consider that idea. I need to see at least a drop below the 1.3888 territory right here. If it, like I said, if it reverses from the 21-day EMA, then the 140 level is back on the table, and if we get a clear break above it, yep, higher levels could be met. And finally, EURUSD. So drifting back down, and yeah, I mean, it's failing with this 1.1990 territory. So this is what I said this morning and yesterday as well, that in order to at least examine slightly higher levels, a push above this 1.1990 level is required. But as you can see, we didn't really get that, and instead we're having a nice reversal here back down. So which means that well, it increases the chances for a test of this area, the 1.1880 territory. So if we get a drop below this, then yes, we could aim for that 200-day EMA or even below that. But at the moment, we're just stuck here, and we're just observing the price action and waiting for a violation of one of these levels. Either a break above the 1.1990, that's what we need, or a drop below the 1.1880 territory right here. So guys, that was a quick session, just a quick, so to have like a quick overview of some certain instruments that we looked at this morning. Some new ones, of course, but yeah, I hope you found it useful. Thank you very much for joining in and watching this one till the end. If you want to catch my video tomorrow morning, as always, my Trader's Espresso, that's 7 o'clock GMT time. For now, have a wonderful evening, stay safe, and I'll see you later. Thank you very much, and bye-bye.